Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be looking at an overview of the key or the core events that are due to influence the markets this week. We'll try to understand the top highlights and, of course, try to understand the current or the prevailing market structures. So once you join in, you can just say hi on the live comment section. Also remember that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So that being said, let's get started with the economic calendar. Good morning, Jason, and thank you for joining. So from what you can see in the economic calendar, it's quite a slow week compared to last week. We don't expect any major events to massively move the markets. So as of this morning, we had business New Zealand services index, which came in at 44.6, showing that the services sector in New Zealand is improving, but still within contraction territory. Right move housing price index in the UK came in at negative 1.5%, basically showing that housing prices are dropping. Then we had core machinery orders from Japan month over month. In this case, we had a good uptick of 2.1% compared to the previous reading of negative 3.2% and the expectation of 0.9%. So for the rest of the day, we will be focusing on a speech by Federal Open Market Committee member Waller at 4:15 p.m. And of course, the conference board leading index at 5 p.m. Both events are expected to be having minimum impact in the markets. So tomorrow, early in the morning, first thing will be the interest rate decision in China. For the 5-year loan, we don't expect a change. We expect that to be held at 3.85%. So for the 1-year loan prime rate, we also expect rates to be held at the current level of 3.35%. So later on in the day, we'll be getting the final core CPI as well as the final CPI for the Eurozone. And we're expecting 2.6% for the final CPI and for core to be 2.9%. So we also be getting inflation data from Canada, where there is an expectation of an increase by 0.4% in the previous month. This will be very important. So Tuesday trading will probably be influenced by the Canadian dollar. Second will be the euro, and of course, we'll also be looking at the Chinese yuan. So on Wednesday, the key thing will be the FOMC meeting minutes as well as the crude oil inventories. So for crude oil traders, we'll be expecting some good volatility at 5:30 p.m. And of course, the FOMC meeting minutes could excite the dollar. So we could be seeing increased volatility in the dollar at 9 p.m. on Wednesday. So on Thursday, this is the S&P Global Manufacturing and Services PMI day, releasing for global economies. So it's not just one economy. So we'll be getting right from the morning from Australia, same data reflected for Japan, the Eurozone, the UK, and the US in the afternoon. So we expect some good volatility from this one, which is a measure of the trends in manufacturing and services sectors across different economies. So key focus will be on the UK manufacturing PMI and services, as well as the US flash manufacturing PMI and services. So the pound pairs and the dollar pairs might have some good volatility. So also, most importantly, an annual event that happens in the US, and this includes central bankers as well as economists, will be starting on Thursday, the 22nd of August. So it's called the Jackson's Hole Symposium, and it brings in some good volatility in the market as you get the top central banks speaking about monetary policy in their respective economies. So just to give you a brief highlight of what it is and how it works, just opening the page for a second. So it's usually hosted by the Federal Reserve Bank of Kansas City, Denver, Oklahoma City, and Omaha. So Jackson Hole Economic Symposium, the Federal Reserve Bank of Kansas City hosts dozens of central bankers, policymakers, academics, and economists from around the world at its annual Economic Policy Symposium in Jackson Hole, Wyoming. So the theme for this year will be the 2024 Economic Policy Symposium, reassessing the effectiveness and transmission of monetary policy, which will be starting this Thursday. So among the key leaders that traders will usually follow is the central bank chair of the US, which is Jerome Powell. So the central bank chair of the EU, Christine Lagarde, will also be there. So we'll be expecting comment from that side. And of course, there will be a key focus on Japan. So we'll be looking forward to Kazuo Ueda and to see if he'll be having a speech. So at the same time, this is expected to weigh focus on current monetary policy. We have seen a lot of central banks going for rate cuts in the recent events. So now that they are addressing inflation, which some of the central banks have already warned over, there's a key underlying problem happening in the job market where a lot of economies are seeing an uptick in unemployment. So that is expected to be a major theme this Thursday, and it could bring in some much needed volatility. And as usual, we all know as traders, without volatility, then there's no making money. So volatility is good for trading because this is when prices move and it creates opportunities for you. So back to the economic calendar. So once the Jackson Hole Symposium starts, we'll be looking at the individual speeches from different presenters. So for instance, the speech by Jerome Powell will be a key focus for a lot of investors around the world, and we expect a lot of good reactions. So weekly unemployment claims will also be there on Thursday at 3:30 p.m. So we expect to see some volatility there. Then fast forward Friday, we start with retail sales from New Zealand, quarter over quarter at 1:45 a.m. Japan's national core CPI year over year at 2:30 a.m. In this case, we expect an uptick to 2.7%. Core retail sales for Canada, as well as retail sales at 3:30 p.m. The Fed chair will be speaking at 5 p.m. Then the Jackson Hole Symposium continues. And of course, the Bank of England Governor Bailey will also be speaking at 10 p.m. So a majority of the trading might be positioned or directed towards listening to speeches, interpreting those speeches, and using that as an armor to inform your trading decisions. So that being said, early this morning, the markets have started quite slow. However, there is quite a number of wildcards that have happened this morning, especially the strengthening of the yen and the weakening of the Nikkei 225 index. So we'll be looking at that next. So looking at the comment section, good morning, Francis. Good morning, Thomas Mashuma. Good morning, Manabasto, Elvis Malombe. Thank you for joining. You can see Gisharu in the house, Dennis Ireri. Thank you for your good comment for me to check the Nikkei. There is a good question from James. Inspire us. What's the biggest profit you've ever made in one trade? It's a really good question. I prefer keeping my trading activity private, so that we can focus on the really good content that creates value. So let's jump straight to some technical analysis. So from technical analysis, I'll be sharing the MetaTrader 5 trading application. So from here, I'm hoping everyone can see that the dollar index had a big sell-off last week on Friday, and it has continued with that sell-off today. So since the early morning trading hours, there was a slight uptick in the dollar index before it continued selling off and then bumped a little bit, and now it seems to be continuing with a bearish momentum. So we know the dollar index as a benchmark that weighs the strength of the dollar against 6 other currencies. So in this case, when you see the dollar index being weak, then there are other currencies that are benefiting from that. Of course, if you look at the pound, since open, it has had a pretty good bullish momentum. So this has been the open of the week for the pound, and I expect this momentum to continue for the day. So if you look at the 4-hour and daily candlesticks, they're indicating some further bullish upside. So there's a good chance we could be seeing the pound hitting 1.3 later today or even tomorrow. So there is a good chance we keep on seeing this bullish momentum continuing. So as for the Euro USD, we are also seeing some bullish momentum with the key level being tested, and this was our resistance that we saw last week. So we could be seeing some further upside momentum coming in towards 1.10886. So from the 1-hour chart, you can see that the highest price that we saw on Friday, last week, is currently being tested, and if the euro breaks there, then we could be seeing some more momentum upside, perhaps the market reaching out to 1.10886. So as backed on a weak dollar, we are also seeing the Swiss franc gaining some ground against the dollar. So in this case, I'm looking at a particular trend line here, the bottom that we have seen over the last 2 weeks. So now that we have seen this pressure mounting, there's still some room for further downside, perhaps retesting this lower trend line here. So on your favorite pair, which is gold, it managed to reach a new all-time high last week on Friday of $2,510 per ounce. So today at market open, if you go to the 5-minute chart, you would see that it retested the same price level again. And since then, it has been trading in what looks like a triangle, which is basically a consolidation zone. So what we have been seeing is this playing out for the better part of the morning. And now as we enter the London session, we are seeing the market having this uptick, or basically making this breakout on a very small time frame, which is the 5-minute chart. But all the more significant that gold is likely to retest the previous high of 2510. So the big question is on USDN. Of course, we have seen the USD losing about 1%. So far it's down 1% from the open of the market today. So as the yen continues strengthening, then the conversation about the reverse carry trade continues. But before we even get to the conversation about the reverse carry trade, it's important to notice that this has been a continuing trend line, working pretty close as the resistance on USDN. And once the market got there, and this was last week on Thursday and Friday, we saw a very strong resistance and the market continued dropping, with today being a major breakout. So I'll remove these area trend lines that we had done last week. I think they served their purpose pretty well. And now you can visualize that this was the major level of support. It was broken this morning. And after that, there was a big run downwards. So after this breakout, we had a huge drop here. So the impact of this was a much weaker Nikkei 225 index. So after seeing the yen strengthening against the dollar, the overall outcome on the other side was basically the Nikkei 225 index having this period of drop earlier this morning, despite opening with some bullish momentum. So if you go to the 15-minute chart, you'll notice that the market had opened pretty positive before the yen started gaining, and there was this big sell-off that basically broke the lowest price that we had seen on Friday last week. So from the 1-hour chart, it seems more like a continuing chart. So from the daily chart, you can see it was a pretty good recovery from the crash we had seen here. So now I think we should be looking forward to some further downside momentum. So clearly, after the big drop here, the market is struggling to break below Friday's low. But if there's a break, we could be seeing an extension of the pullback down to previous lows, somewhere within this range. I would say within 36,676 and 36,846. So if we continue seeing some further downside momentum, the key level test is Friday's low. So market breaking that would mean we see some further downside to within this range here. So as for US equity indices, we have seen that they were also bearish in the early trading or the morning session, but they had their best week of the year last week. So last week, moving from here to here, was the biggest gain that the US equity indices have had in the entire year. So looking at the Dow Jones, it's the same thing. There was a pretty strong bullish momentum. And for the SP 500, it's also the same. We saw a pretty good and strong bullish momentum. And now the markets are testing a key level resistance, especially for SP 500. You can see the area has been working or serving as resistance. But the bullishness we saw in the market on Friday may still have some power in it, and we could be seeing the market looking to extend the rally this week. So I'm quite bullish on US equity indices. So despite the current pullbacks we are seeing in the very short term, I expect to see some further bullish momentum as volatility comes in the markets again. So from the 1 hour chart, this is how it looks like. So 15 minutes is like this. And as you can see, volatility is coming. Look at the relative size of candlesticks. So as we enter the London session, the candlesticks are getting bigger. So we could be seeing some further uptick from these indices. So track the day's high to see if we breach that. Hopefully that should be a signal to indicate that there is a further momentum upwards. So same case applies to the Nasdaq. So from the 1 hour chart, this is how it looks like. 15 minutes chart, this is how it looks like. So it's more important to track this area here, because if the market was to break it again, then that would signal an extension of the rally, and that could present a nice trading opportunity. So the pullback is a gift. We continue observing it until we see evidence of buyers coming in. So there has been fears of a slowdown in the global economy, which means a much slower demand for oil. So those fears has fueled a big drop in oil prices. So we have continued seeing oil moving back downwards since the last week high we saw at around $81.675 per barrel. And since then, it has been a story of bearish momentum, and that is expected to continue today. So clearly, after the market hit this resistance, all we have been seeing is a big drop. So if you look at the weekly chart, we'll try and remove any noise. You'll notice that last week's attempt to move up was met with a strong selling pressure, and oil continued moving downwards. So from the daily time frame, this is how it looks like. So we had of the last 4 days, it's only 1 day that was bullish. So zooming out, you'll notice that this is an overall pullback continuation setup. So from the forward chart, this is how it looks like. And as I mentioned, we had this area here acting as resistance, and now oil seems to be moving back downwards. So if you are a person who is familiar with some of these patterns, especially the inverted head and shoulder pattern, then you should see one shaping up here. I don't know if you can see this being the first shoulder on the lower side. And this on the forward chart, the head is currently here, and we could be seeing some form of the market completing the pattern here. So for now, the focus is on the market retesting this previous low, and this is around $77.864 per barrel of oil. So I'm hoping I've covered majority of the key assets that we needed to cover. So the FTSE or the UK 100 index managed to make a breakout last week on Friday. So today attempted to push this breakout further back downwards. And now we are seeing bulls coming back in and pushing the prices higher. So according to my analysis on Thursday last week, we had talked about the market pulling back to around this area before making a big move. This happened during a news event. So we had a strong rally, and eventually the following day, the market erased some of those gains. So today we are seeing more of a sideways market. So I wouldn't be overly excited with the UK 100 index. Clearly, nothing much is happening around these levels. So it's more of a sideways ranging market until we see evidence of the contrary. So we remain neutral until we have evidence of a direction that the market is taking. So that being said, there's a good question here. What is the most promising pair this week? I believe this is a really good question. I don't expect much of a volatility in the markets this week. However, the pound seems reasonably strong. So if you look at the daily time frame, we have seen the pound making gains against the dollar. So if you look at this, then you count from this bottom here. We have had 9 straight trading days with only one week one where the pound lost some ground to the dollar. And now there's a key level target on site around 1.3. It's a round number. It's a major resistance area. And it seems like the price is pumping just for that. So looking at the candlesticks on the 4-hour chart, on the 1-hour chart, and looking at the target, it seems likely that the market will eventually push to that area, especially considering that the dollar is currently pretty weak. So if I was looking for one strong currency to benefit from, it would be this one. So also you have to keep an eye on the yen. So the yen keeps putting up some surprises. So today's strength of the yen might continue for the better part of the day. And a nice target would be 144.234. But now, if you look at the price action, there seems to be some form of pullback. So if there's any evidence that the yen continues strengthening, then we should be looking at targets around 144.234. So there's a question that we check on pound yen and US 2000. Normally, okay, let's begin with pound yen. So the pound is currently a pretty strong currency. So despite the strength of the yen earlier this morning, which led to a breakout towards the lower side, we are seeing the pound responding quite positively and beginning to reverse the earlier yen gains. So in this case, I wouldn't bet so harshly against the pound. So in this case, I'm seeing a potential recovery here. We could be seeing the market going back to the low that we saw on Friday. So if this recovery continues, then the idea is to ride until we get to this area. Also remember, Monday is a low momentum day, so we don't expect much of a volatility. So some of this momentum could slow down as the day ages. So there's a good question here. Hello, apart from stop losses, what other ways can one reduce losses? To reduce your loss, you need to do a couple of things. One, you don't over risk. So when you're taking a trade, make sure you're using the appropriate lot size. So I would advise that you at least have a demo account where you basically sample your trades. So if you're looking to buy Euro USD and you have a certain area where you think you'll put your stop loss and take profit, first of all, execute that trade on a demo account. Play with different lot sizes to see how much you'll be risking in terms of dollars. And once you're comfortable with a certain amount, then apply that on your live account. That will really help. So the other thing that you need to do if you want to minimize the risk of making a loss in the market is to be able to spend more time outside the market than inside the market. You don't have to have trades in the market 24 hours a day. Sometimes have some days where you break, especially when there's no setups in the market. So by reducing, you increase. Like by reducing the number of times that you are in the markets, you basically become better at observing the best opportunities in the market and taking only those. And in that case, you increase your chances of being very profitable. So I don't have USD 2000 chart right now. I'll make sure to check it out and share an analysis. So there was a question on pound card. I believe I have that in my chart, if I'm not wrong. No, not yet. So, on the question of having a look at the Nikkei, we already did, and we are seeing that there was a big sell-off and the market is making a good recovery. So this is what we are seeing, but then I expect a continuation. Of course, that doesn't mean that because I expect a continuation, you go for a short selling trade. You should do further research and study the chart further more. So in this case, it's more likely that we could be seeing a recovery. Remember, the Bank of Japan and Treasury controls a substantial amount of ETFs that hold the Nikkei 225 stocks. So it's not within their interest to see the market collapse. So we could be seeing the market making a recovery from here. But from the 1 hour chart, what it looks like, it's a very technical area. So from the 1 hour chart, you can see that there is still more room for downside. So perhaps one more push before the market makes a bounce. So for now, I would be observing the current price action to see how the current 1 hour candlestick closes. And once I gather that information, hopefully I'll be able to capture one or two. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. Remember, if you'd like to register for an account, to check the links in the description below. That's on YouTube. If you're watching this on X, make sure to check out the links from the FX Pesa profile. Also, remember, we have a new episode of the Bullish Banter podcast available on all podcast platforms, including the FX Pesa YouTube channel. And at the same time, we have a new episode coming up for the Financially Incorrect podcast. So happy to have these sessions with you guys and enjoy the rest of your day.